Kia ngā mihi nui ki e koutou. E na rau rangatira ma nau mai, haere mai, whakatau mai ki tēnei hui mariko. Ko Barry Coates aho ko te karahi o te potea whai whakaro. Nā reira, tēnā koutou, tēnā tātou katoa, tihei Māori ora. So a very warm welcome to you all. I'm Barry Coates. I'm CEO of Mindful Money. In case you haven't come across us, Mindful Money is a charity that provides transparency on investment and advocacy for investment in things that create social good as opposed to things that create harm. So we undertake these online seminars in order to engage and educate both the public and other audiences, including the finance sector. This is the sixth in our seminar for this series. We've done two other series before that. All these seminars are on Mindful Money's website. They're also issued as podcasts as well as videos. So please check them out on the website. Lots of interesting stuff there. Please feel free to pass them on to others. They're generally held on Wednesdays at midday, and you can sign up to get notifications about the series. So the issue for today is about corporate responsibility in the finance sector. But before we do, it's now been almost 2 weeks since Cyclone Gabriel, and our thoughts with those who are recovering, those who are rebuilding, and those who are mourning loved ones. So I know one of our panelists, Nick Stewart's sitting in the Hawke's Bay, and Nick, I'm sure that you've been busy coping with the aftermath in your community. So the issue, and we'll come back to talk more about that. But this issue of corporate responsibility in the finance sector, I think, is both timely and important. The context is that internationally, many companies are adopting a business purpose that's about their contribution to society and the environment, not just about maximizing profits or maximizing returns to investors. So part of the rationale is that a business purpose can build better leadership, employee motivation, customer loyalty, and provide other benefits that a focus on profits alone does not do. Quite significantly, in 2019, the United States Business Roundtable, which is not known for its corporate responsibility, they signaled a move from the mainstream corporate sector away from the traditional notion of shareholder primacy to recognize that successful businesses need to meet the needs of all stakeholders. So that stakeholder approach is now pretty mainstream. And certainly, as we'll hear in this seminar, many New Zealand companies are using approaches like shared value, corporate social responsibility to seek positive outcomes from their business activity as well as long-term financial returns. And a question for this seminar is, so what's happening in the finance sector? In a way prompted by the fact that we've seen relatively few financial services business adopt a progressive corporate purpose. We've seen certainly an increase in issues like managing ESG, environmental, social, and governance issues, but primarily those are about managing risks. And they are important risks that should be managed, and it's still within the framework of maximizing financial return. So we are going to delve into the broader aspects of what is the the opportunities, the upside of corporate social responsibility beyond managing ESG. So to start us off, I'd like to warmly welcome Chulai Wong. Chulai is the Aotearoa New Zealand manager for BLAB. It's a non-profit organisation which oversees B Corp certification. B Corps, certified B Corps are businesses that seek to benefit all stakeholders and hold themselves accountable for business being a force for good. Chulai's background is in impact measurement and systems change, and she's recently returned from the UK, where she worked for similar industry bodies and consultancies. So, very warm welcome to you, Chulai.
Kia ora, Barry. Thank you for having me. It's really great to be here. Yeah, I mean, as Barry has said, I'm the Aotearoa New Zealand manager for BLAB. And I think we actually talk more broadly about the B Corp movement rather than just certification. And for those that are less familiar, the B Corp movement has been around for around 16, 17 years now. And ultimately, it's about driving economic systems change. And what we mean by that is that we believe our current economic system, which focuses mainly on financial returns, is leading to a number of negative impacts socially and environmentally, like the effects of climate change, which we're feeling very gravely in New Zealand at the moment, and inequality all around the world. And so this shift to stakeholder governance in business, we think, is the way to equip ourselves to make better decisions every day within business, that it not only avoids those negative impacts, but actually can drive positive impacts and outcomes for people and the planet. So our certification, which is what most sort of people know us for, is a verification or a mark that recognizes businesses that are operating in this way. So we look at a company's impacts across some key areas like community, environment, customers and workers. But crucially, we also look at how businesses are managing those impacts over time and looking to constantly improve. So it's not about a kind of single, a business that's being organic or a business that is fair trade. It's all of those things and looking at how they can continuously improve and think about the role that they play in society. I think it's really interesting that sort of the title of this seminar is around corporate responsibility. And there are so many buzzwords in this industry, and CSR and corporate social responsibility was something that has been around for a long time and used to mean giving to charity. Essentially, businesses would go about their business over here, and on the other hand, they might be giving a small amount of profits to a charity, and that was the extent of their ESG sustainability impact kind of strategy. And so I think it's interesting to return actually to this term, because I think businesses are actually becoming more aware that they are responsible for these social and environmental impacts, and they have a role to play and to be accountable. They're part of the fabric of society. We are all interdependent, which, the pandemic, urgently highlighted to all of us. And businesses are crucial to solving all of these challenges. And I think in particular, the finance sector plays probably the most important role in that. So really looking forward to this discussion today. The B Corp movement is at a really exciting time in New Zealand. We're just about to hit 100 B Corps here, and over 6,000 B Corps around the world, with 300,000 businesses using our tool to measure their impact. So the momentum is there, and it's a really pivotal and exciting time. Thanks.
Great. Thank you, Chulai. We'll come back to those issues, and be good to delve into those in a bit more depth during our panel discussion. For the audience, as we go through this seminar, you're more than welcome to use the Ask a Question button down the bottom to ask any questions, and we'll make sure we'll deal with those. I hope you have lots of comments and questions as a result of what we're talking about here. I want to move on and introduce Nick Stewart. Nick, very, very welcome to you.
Thank you.
Nick is a financial advisor, accredited financial fiduciary, an associate financial planner of Financial Advice New Zealand. He's executive director and CEO at Stewart Group and holds a number of directorships in privately owned companies as well as independent trusteeships. Nick is proudly Ngāi Tahu. So, Nick, very warm welcome. Can you give us a quick introduction to Stewart Group and your work and your B Corp certification?
Certainly. Love to. Yeah, look, thank you for the opportunity to partake in this korero. Always good to have a discussion and talk about all things sustainability. So, yeah, really look forward to it. In terms of for us, so we're, as you said, we're a B Corp certified firm. It actually sits under our parent group, which is the Tarihi Group. So that cuts across both our Stewart Financial Group, which is a financial advice retail business, also our wholesale business, which is Finzo, and also we're the asset consultant to the booster asset class KiwiSaver funds. So it's a full umbrella, so to speak. Yeah.
Great. And can you tell us a bit about your journey along the move towards B Corp certification and how the group as a whole kind of has come to the point of wanting to make a strong statement on business purpose?
Certainly. A couple of years ago, as part of a global association that we're a founding member of, we were fortunate to meet some very enlightened individuals globally who have been B Corp certified for quite some period of time. And it was amazing to hear what they had done and what their journey looked like. So we decided to dip our toe in the water, so to speak, to see where we sat. And we were pleasantly surprised that we'd actually, we'd progressed quite well over a number of years, but there were those last few steps to climb the mountain. And so we set ourselves a target over a 2-year period to achieve those. And it basically snowballed where, we now, like above me, there are 100 solar panels that power this building every day. And we've got surplus power, which we actually pump into or spill into a private community network, the only one in New Zealand of that kind at the current time. So it's been an amazing journey. It's been a lot of fun. It's a lot of work, but it's interesting. It just becomes part of your DNA. You do the mahi. It's great fun. Your team, your family, other stakeholders, both in terms of shareholders and clients, they get on board. And that's why I use the word snowball, because it just gets bigger and greater and more fun. And the work, the mahi, actually becomes easier.
And Nick, I realise you're sitting in Hawke's Bay and you're I'm sure dealing with lots of stuff in your community around the cyclone. I hope you and your staff and families are all okay.
We are, touch wood. We do have some clients that have been adversely affected, and everyone knows someone. It's 1 degree of separation here. Everyone can find someone or knows someone who needs some help. And most of us don't have any spare time on the weekend because we're getting into overalls, very high wellies because the mud, it's deep. And you get on a spade and you put your shoulder to the wheel and you help out.
Yeah. And just out of interest, how did the private energy network hold up on during the cyclone?
I'm actually meaning to do a post on Friday to our community on that. So what happens is, to protect the integrity of the network and so that no one gets electrocuted, when they actually shut the network down, all solar transmission also gets nullified, because if they're shutting down the network, they don't want you pumping on your solar onto the network when they're wanting to repair lines. So for a period of about 23 hours, we were not producing any power because the entire infrastructure network of pretty much most of Hawke's Bay shut down. But pleasingly, from 3 p.m. on Tuesday, we were producing power across the entire network when the network was short of power. So that was amazing. They were short on power, and here we were turning up with a 50% excess by about 10:30 a.m. through to 3 p.m. each day. It was amazing to watch.
Great. Well, what a good reminder about the need for resilience in our energy systems.
Oh, yes.
Thank you very much, Nick. Let me pass to our third panelist, Jules Riley. Jules is the Senior Growth Manager at Medical Assurance Society, commonly known by its initials MAS. And they are a mutual insurance and KiwiSaver provider owned by its members. In his role, Jules is accountable for driving member growth and developing MAS's responsible investment program with a specific focus on climate and health issues. So, Jules, a very warm welcome to you.
Yeah, thank you very much, Barry. It's good to be here. So MAS is a really interesting and unique company. I'm really proud to work there. We're a mutual general insurer, so that's life, car, contents, house. We also do life and income insurance, and we do investments in KiwiSaver. So MAS has this unique backstory of being established sort of 100 years ago by a group of doctors after the First World War, where they sort of realized the benefits that the army brought to them in terms of how the army looked after, its soldiers at that time, and how they wanted to expand that sort of level of care to their profession. So it was originally started as an insurance company for doctors and by doctors, but it's now expanded to many different other products, and it's open to all Kiwis. It remains owned by its customers, which is a really great example of stakeholder capitalism in practice, and that being looking beyond just shareholder primacy in terms of what the company is about and really caring about its members, because the members are the owners, and about the communities and the environment it operates in. And that's why we have a purpose of inspiring a healthy Aotearoa. So in practice, what a mutual means is, really encouragingly, is because we don't have this large profit incentive, there's much less of a barrier standing between doing the right thing for our customers, which means less barriers to paying claims, and because that's what we're about. And it also means that we're responsive and we listen to our customers. We were asked a few years ago by our members to do more in the responsible investing area. And they were doctors, so they're committing their lives, or many of them are doctors, committing their lives to helping support a healthier, healthier communities and healthier people. So they wanted to see the same outcome in their investments as well. So that started our responsible investment journey, and we originally began by excluding certain sectors that were harmful to human health, for example, fossil fuels, tobacco, weapons. We've now evolved as we've gone along and extended what we do in this space to engaging with the companies that we own on areas like human rights, labor rights, anti-corruption, and the environment. And we've changed our voting policy. So every person who's a KiwiSaver member, for example, owns shares within a company. Those shares carry voting rights, and the manager, so us in that case, votes on their behalf. So we take a triple bottom line voting policy. So we focus on people, planet, and profit, and advocate those values to the companies that we own when we vote at company meetings. We've also transitioned to a more sustainable investment focus. So we currently target companies with superior sort of environmental, social, and governance performance. And that translates to a carbon footprint that's about half the market index average, and an increase of about 80% versus the market's index average in terms of investment into clean technology solutions. And these are things like clean energy, energy efficiency, green building, pollution prevention, and sustainable water. So that's something we're really proud of. And just to retouch again, I think on the mutual and cooperative aspect of MAS, because this is really unique, and perhaps many people don't understand it because it's a very small industry in New Zealand, although it's much more established offshore. So mutuals and cooperatives are a form of company ownership where the customers are owners in the companies. And financial cooperatives were actually among the first types of cooperatives established in New Zealand. So they have a history back to sort of AMP in 1854. And financial cooperatives were around before sort of the more well-known cooperatives like dairy cooperatives and Fonterra. And that has changed over time. And so now there's only about 2 mutual insurers left in New Zealand, MAS and FMG, which is an agricultural specialist insurer. And that's a shame in that the large actors in the financial services industry in New Zealand are now typically Australian owned, but also other countries, and they're incredibly profitable. So we have, 4 large Australian banks, for example, generating around 70% of the net profit after tax of the largest 50 publicly traded companies in New Zealand, or otherwise known as the NZX 50. So that's important, and it's important because people in New Zealand spend more than they think, perhaps, on financial services. It's one of the largest expense categories after things like food. And so, according to Stats New Zealand, you've got people, the average sort of household mortgage interest repayment bill is over $10,000. Households are typically spending $3,000 to $4,000 on insurance premiums. And if your household earns above the average of 110 grand, which isn't that high, it's possible you're spending much more than that. So it's important to sort of think, okay, you're spending a lot of money on financial services. How are you, what are the externalities of that expenditure, given it's, quite a large proportion of your after-tax income? And so choosing to spend your money with financial cooperatives and charities and mutuals not only keeps money in New Zealand, so funding investment and jobs and things like that, but it has wider effects too, because these are more socially minded enterprises which think about their communities and their customers. And so, for example, MAS has got a large charitable arm. We run the MAS Foundation, which is focused on addressing health equity in New Zealand, and it distributed around $2.5 million to that last year. And health equity is one of these really embedded and challenging problems in this country. And you can think about it in terms of you've got 2 people and one has a life expectancy that's 10 or 15 years longer than the other person, even though they're born on the same day. And the difference in that life expectancy is down to things like who were their parents, what kind of education did they get, what kind of food could they afford, and all of that is just compounded over their lives and has flow-on effects to the next generation as well through their children. And so these are things that the MAS Foundation is trying to address.
Great, thank you, Jules. That's a great introduction. I'd like to just set a context. Through the seminar, we're going to be talking about some specific investment funds and some fund providers and financial services providers. The seminar is about investment strategies, about corporate responsibility, about business purpose. It's not about financial advice for any individual, and it's not a recommendation to invest in any particular fund. So that's our caveat to in a way make sure that people don't think this is an invitation to invest or to use a particular financial advisor. I wanted to start off with a bit of context from B Corp. And Chula, I wonder if you can help us understand the growth of B Corp in New Zealand and internationally, because I think it's kind of important for us to have that picture. What's been happening? What are the trends? what's happening internationally in New Zealand, and then we can say what's happening in the financial sector on B Corp certification.
Yeah, sure. So the first New Zealand B Corp was certified back in 2012. So it's been 10 years here. But in the last 12 months, the numbers have doubled. So we were at about 40-something B Corps at the start of 2022. And as I said, we're now nearing 100. We're at 99, waiting for the next one, hopefully this week, to tick over. The movement started in around 2007. Around 2007 in the US. So it's been going for quite some time. And that growth, I guess, is similar to, globally as what's happened here. It's had a very long tail. It took a long time to get to, the first couple of thousand B Corps. But during the pandemic, what was quite interesting was, B Lab globally really predicted a bit of a downturn in certification, that people might even decertify because sustainability might be the first thing off the shelf if businesses are really trying to look at surviving. But what was interesting is the opposite happened, and we had, an even greater surge in demand than we could have ever predicted. We had 6,000 applications for certification in 2 years, and at the time we only had 3,000 or 4,000 certified B Corps. So it was just an enormous doubling down on sustainability, which was really heartening to see. And I guess that kind of reflects individuals within those businesses reflecting on what matters in today's world. It is growing very fast, and it's not the only certification out there. There are lots of other ways that companies are now looking at reporting their impact and doing it in a really admirable way. I mean, 6,500 B Corps is still a drop in the ocean in the millions of companies that exist globally. So we have a long ways to go in terms of our big vision of economic systems change. But with big corporates, I think, coming on board now as well. In New Zealand, we have the likes of Kiwi Bank, Kathmandu, Sinlay. Those are all three very large organizations. And internationally, there are companies like Patagonia, Ben & Jerry's, Danone, Unilever, that are part of the B Corp movement as well. And that really helps to raise awareness amongst consumers, investors, and the business community broadly around, the need to change to this way of operating.
So turning to the financial sector, how does that look for the financial sector internationally and in New Zealand?
So we do have a number. We probably have 6 or 7 financial institutions in New Zealand that are certified. A couple of banks like KiwiSaver, Co-op Bank, and then organisations like Stewart Group, Pathfinder, Moneyworks. Hopefully I'm not forgetting any. And I think, people don't immediately think of even the service sector in general as the kind of organisation that needs to have a certification like B Corp. But they are actually really critical in the role that they play in the broader system in terms of financing those other companies and driving the outcomes that we want to see. Those social and environmental outcomes are often driven by investors and the way that capital flows. So it's really heartening to see that more of them come on board. But I think it is probably one of the more tricky sectors to make this shift and move away from the idea of financial returns as the primary definition of success. I think there's still a lot of grappling of that within the financial sector and what it really looks like in the future.
So turning to you, Nick, how does that look from your perspective when Chilai says it's quite difficult for the financial sector? What were the challenges and dilemmas that you faced in moving to B Corp certification?
Sure. Well, the first thing is, there is a cost, and I used that analogy before about climbing a mountain. And the cost, it's not just a fiscal cost directly, but it's just the time and having someone to be the spearhead and actually lead the team on that B Corp, on that sustainability journey. We just kind of sucked it up and just said, hey, this is just part of doing business. We live in we live in a rural hinterland, a beautiful piece of New Zealand, and we are now seeing firsthand exactly what it's like to live in a changing environment, and the impact of that is it's stark. So here we are. We're really glad we've taken that journey, but yeah, I guess that cost structure was, or the structure that would come through with this journey, that was something that as a family, that we decided, it's a family company, we decided that we would embark on that journey because we felt that was our social license to operate in this beautiful area that we reside.
Mm. And were there any particular sticking points where obviously as a financial advisor, you're trying to earn good returns for your clients, and your clients then kind of have a broader perspective on things. How do you see any tensions there between what clients may want in terms of values, in terms of things that are important to them about society and the environment, versus their financial returns?
We always make sure that so we have a very firm investment philosophy as a company, and of course as a FAP, as a financial advice provider licensee, and we make sure that everything is underpinned by science. So there's a framework, so there's a robust approach, that it's evidence based, and so we always explain that to clients. That means that we can't always meet all of the requirements of every single client we meet, but we are, we'll only ever make an undertaking of something that we believe we can fulfill, which I think is really, really important with being a financial advisor and a financial advice provider licensee. If I go back to the first part of your question about what were some of those hurdles, well, the first element is we didn't have the sustainable funds that were required to meet all of the asset classes and sub-asset classes that make up our investment framework. So that took us about 18 months to complete that journey by approaching certain fund managers to have certain funds created with a flavour or a philosophy that met our sustainability requirements. And that was a journey. So in other words, the last piece we did was around the sustainable element of emerging markets, which can be a very, very, excuse the pun, a very dirty area. And we were able to get that built, but that was a 9-month journey from discussion until we seeded the fund. But hey, it was really interesting. Clients were very, very happy. We shared with them the journey we were going on. But it did mean that for a period of that 9 months that we were unable to complete the entire pie of the investment suite. We couldn't put our hand on heart and say that it had a full sustainability overlay. We just couldn't make that statement. And that was a challenge, because clients want all in, they're either in or they're out. And if you kind of say, we're almost there, but there's this wedge that's not, they say, well, when will it be completed? So it was good dialogue.
Thank you, Nick. That's that's it's really, really useful to hear those insights. Turning to you, Jules, how about for Mass? Where are those sticking points? Where are the difficulties between being a customer-driven mutual society versus the traditional view of maximising returns for investors? Where do you see the dilemmas?
Well, that's right. As a fund manager managing, a couple of $1 billion on behalf of, 15 to 20,000 members, we have a fiduciary responsibility to maximize returns for those members, because we're talking about their first home savings, we're talking about their retirement, and we want those to be, as good as possible, right? So there is a tension there, and it's something that we consider very carefully and discuss often. And, when you're looking at, so we are our responsible investing journey, and I know that's a cliche, but it is evolving, and we are exploring the world of impact investment very seriously. And one of our key requirements is that impact investments have that measurable impact in environmental and social areas, but they also yield commercial and competitive returns. And so we can't balance concessionary returns with our fiduciary duties to maximize returns for our members. We see if we want to forego returns in order to provide impact, we see that as more the space of our foundation that obviously doesn't need to generate a return and can have measurable impact in societies. So our funds are very much focused on commercial return alongside impact. And that might be impact in listed markets. It might be listed impact in unlisted markets. So, some things that we've looked at include, solar farms being built in New Zealand or community housing. So there are a few examples now of impact investment in New Zealand. The field is pretty small, but it's growing and getting more popular, and there's some really great managers doing some really impressive things in the space.
Probably a good time to turn to a question that's come in. It's from Rowan McMahon, who's a partner in Climate Venture Capital Fund, and they're playing a great role in identifying particularly smaller startup companies and seed companies around climate solutions. And Rowan notes that that's been identified as an urgent priority at the global level. And Rowan's asking if this kind of issue about positive investment in climate solutions might be something that is one of the areas where those with business purpose might perhaps go ahead in their investments, even if and Ron's not suggesting this, but even if the financial returns are not necessarily so high. How does that look to you, Nick and Jules? Because this really comes to the issue of kind of impact investment and investing in things that have positive social and environmental impacts. Is that an area where you think that that can be a part of a business purpose to actually seek out those investment opportunities and things that do produce a financial return, but maybe also have a strong impact rationale? Nick?
On that one, we've looked into it, but we've decided that we didn't wish to head down the impact investing path unless it was specifically requested by the client on a bespoke mandate. That being that we're a DIMS license holder, so we need that kind of evidence-based approach coming through and meeting the investment fiduciary guide principles that we've set as a firm. And at the moment, with the data series that we can buy, the information we can obtain on the impact investing, we think that at the moment it's just a bridge too far for us in that area. But again, if a client asks us to run a specific project, we will do so, just as we do if they ask us to run a bespoke project in another area.
And obviously there'd be certain classes of impact investment, like maybe renewable energy, where market growth and business opportunities means that actually there's a very good financial argument for investing in those kind of businesses.
Well, to give you an example, we're in dialogue with a number of hapu or sub-iwi groups who have unproductive land, north-facing slopes, and they're saying to us, can you run a bespoke project for us so that we can generate some form of return from this gorse-covered slope that we can't grow anything on, we don't want to live on, it's remotely located, but it has power near the site. Can you share with us all your learnings and expertise and partners? And we're saying, game on, we'd love to help you.
Good example, thanks. How about you, Jules? Obviously, you guys are doing some work in that area, particularly around climate.
That's right, and There are lots of examples of impact investments, both in New Zealand and abroad, generating commercial returns. So you're not having to give up upside or take on necessarily more risk to achieve the returns that you need to for your fund and to fulfill your fiduciary duties. So would push back at that a little, because that's very much what we're looking for and investigating. And then in terms of are you willing to give up returns to generate an impact? We see that as the area of our charitable foundation to do that.
Okay, cool.
Can I just jump in?
Shall I? Yeah.
I mean, I think anyone who's had the privilege of hearing Rod Carr, who's the head of Climate Change Commission, he speaks at lots of events, and one of the things that he said recently that really resonated is about, the cost of living in the future in a world which is going to be affected by climate change. And places that don't invest in these solutions now are going to be more difficult, more expensive, more challenging to live in, which one would hope means that those investments now are looking, pretty attractive from a financial return perspective as well as a climate solution perspective. So, I totally echo, what the other two have said in terms of it's not necessarily about some kind of, a financial loss in order to have a gain for the environment. And then at a bigger level, I think, this is a systems, economic systems change piece around what is a fiduciary duty. We talk about it in terms of, delivering financial returns. The root of that word actually is just around trust. It's not actually rooted in finance, in money. It's about trust between trustees and shareholders. And one could argue that, people that are putting their money in the hands of others are doing that with trust that they will make those decisions, yes, to perhaps bring some financial returns, but also to care for the other capital in the world, like social capital and natural capital. And when we make investment decisions, we should be thinking about that environmental capital just as much as we're thinking about the financial capital return. And so what I would love to see is that, at a systems level and, in the future where the financial sector might go with this, to justify those investments, not just on financial return basis, but on the return that they bring to the environment.
Yeah, thank you. That's a really good place to end our discussion on. I am sort of mindful that a customer-centric approach means that many customers don't want funds to invest in tobacco, for example, even if there's money to be made in tobacco. So it's not necessarily that fiduciary duty always means maximizing profits or maximizing returns to the exclusion of all other factors. And I think, as you said, July, there is a very good argument for a customer-centric approach to also take into account that many customers don't want to be living in a world where their investment contributes to a worsening of climate change, as we've been reminded recently. So we'll leave it there. Thank you all very much for coming on to the panel. Thanks very much to July Wong from BLAB, to Nick Stewart from Stewart Group, and Jules Riley from MAS. Thanks all very much for joining us. I really enjoyed that discussion. So just to kind of wrap up the seminar, this is, as I said, one of many seminars that we run. We'll do another one in a fortnight's time, so put it in your diary, 12 o'clock on Wednesdays. I wanted to thank our generous sponsors who make this series possible. Thanks to Mercer, NZ Green Investment Finance, Alphinity and to Medical Assurance Society, not only for lending us Jules Riley for today, but also for sponsoring the seminar. Thanks also to Booster, Harbour Asset Management, Chapman Tripp, and trustees executives, and also to Pi Funds and Pathfinder. So thank you all very much for joining this seminar. I hope you found it interesting. Feel free to contact us at Mindful Money if you've got any feedback or any further questions. I hope that we can continue kind of pressing ahead with these business purpose issues in the finance sector and beyond. So thanks to all of you again for your contributions on this work. Kia kaha matiwa.